Assalamu alaikum, everybody. Welcome to the fourth episode of Technical Analysis. As usual, we have our esteemed guest, Faiz Wahab Bhai. He has been traveling back and forth, which is why we were not able to come live last week. But hopefully, we'll be able to cover a lot of topics today. And mostly, we're going to talk about how to manage risk, as well as look at the market at the end of the video, where we are going to analyze all our favorite crypto projects and see where they're heading next. So, if you haven't already subscribed to our YouTube channel, make sure to subscribe my YouTube channel. And I'm also putting link for Faiz Bhai's YouTube channel. You can also follow him there. And let's continue to educate ourselves and grow from here. So welcome to the fourth episode of Technical Analysis. Faiz Bhai, you have been busy, but I believe that finally you're getting settled down. Tell us what's happening.
So first off, I would like to say hello everybody, and I apologize because I moved to a new place and I haven't got internet there yet. So I've been having to find like libraries and coffee shops, but there's also storms going on, so there's power shutoffs and stuff. So that's why the delay. So I apologize, but looks like things are getting back on track. So I'm just waiting for my internet to show up, and I have my plans on uploading on my YouTube channel more topics on trading and stuff as well. But I'm excited about today's topic because it is a very important topic for a lot of new traders, and for more experienced traders, I'm sure you already do this, but for the newer traders, this is a very, very important topic that you should get your mind around, right?
Yeah,
So what we're going to do today is,
and before
yeah,
we get
Dhamma.
started, I just want to make sure that this video is not sponsored by Public. I just like this T-shirt, so if you want to check them out, you are more than welcome to do so. I use them in US for buying stocks and crypto, but as again, this is not a sponsored post. So let's go to the next step. And Faiz Bhai, tell us about how to manage risk, and then tell us what is marketing telling us.
Okay. So I'm gonna go over something called the R system with you guys. Okay. So what is the R system? Now, R system is R is your risk unit, right? We're gonna consider R as your risk unit. Now, as a trader, you, like we said in the previous videos, you always want to enter a trade knowing your entry price, your worst case scenario, which is your stop loss, and your best case scenario, which is your target, right? Now, let's say you have $30,000 in your account, or whatever, you have 3,000, 30,000, whatever. You want to buy Ethereum, let's say. Now, Ethereum is trading around $3,000. You put in your $3,000 and you're wanting it to go up. How do you define your risk if you're only okay losing, let's say, $200, right? With, so we're gonna go over that right now. So risk unit jo cheez hoti hai, I'm gonna see if I can write because I don't have my mouse, but risk unit. So what we're gonna do is we're gonna go look at some possible trades because that will make it easier for us. So remember, Adnan when a couple videos ago we talked about Hammer and we talked about dojis, right?
Yeah.
Yes. So now what I want to do is we always talk about how Hammer at a good support is a good place to buy and then it goes up. Now we know in the trading world that things don't always work out our way. It's a probability game, right? So in a probability game, your main focus shouldn't be on focusing on the outcome of one or two or three trades. It should be more on focusing on a system that you have tested that over time is profitable, right? So you have to really understand that every trade cannot be taken on its like by its win and loss. You cannot be like I'm a good trader because I got three winning trades, or I'm a bad trader because I got three losing trades.
Okay.
It's part of the process. Okay.
Yeah.
So now let's say you see this hammer candle, right?
Yeah.
Right here. So I'm gonna use this as an example. Let's say I wanted to go in on this hammer candle right somewhere at the start, right there. Boom. That's my buy price. Now I know that if the price goes below this hammer, we the whole idea behind the setup of trade is going to be violated. I will be wrong if it goes below this hammer,
Yeah.
right? So what I'm gonna do is I'm gonna put my worst case scenario as take me out when the price goes below here, because if it goes down there, I'm wrong. As a trader, I'm wrong. I don't want to keep staying wrong and hope for the market to do something. Now, let me delete these things.
So you are setting up the stop loss there at the trailing end of it.
Yes, because that's where I know I'm going to be wrong.
Okay.
And I'm just going to change this to our target price. This is just an example because the point of this video is not to show you trading setups. It's to show you how to manage your risk.
Yeah.
Okay. So let's say you are in this trade. You're like, I want to buy here. This is my worst case scenario. This is my best case scenario.
Yeah.
Right. Now let's see what QQQ is trading at. It's at $353.30. Okay. Now let's say our risk unit is $300. $300. Okay. And our portfolio has 50,000 in it, 50K. How are you going to position yourself in this trade with only a $300 risk? So here's what you're going to do. Your buy price is, let's see, what is our buy price? Our buy price is 352.65. Okay. Yeah. So I'm going to make a text box here because it'll make it easier. 352.65. Now our stop loss is at 332.52. So here's the basic formula for finding out how much shares you should buy of something to make the risk unit that you're trying to risk. So you're going to do your entry price minus your stop loss price. So 352.65 minus 332. Let me take my calendar out. This is,
so
that's $20 basically.
There's a difference of almost, I would say, $25. $20.
It's $20, right?
352 minus 330. Okay, 332. Where did you get 332 from?
So this is my stop loss.
Okay, that's
price.
the stop loss.
Okay. So now I know that there's a difference of $20 between my entry price and my stop loss.
Stop loss.
Okay. Now I'm gonna take my risk unit. So I want to risk only $300, even though my account is $50,000.
Yeah. Okay.
So how am I gonna do that? I'm gonna do 300 divided by 20.13, which will give me. I'm just gonna add it right here so we can all follow the steps. Your risk unit divided by the difference
in the price
between entry and stop loss price, which is in our case gives us 14.9 shares, which I'm gonna make it into 15 shares because you can't buy 14.9 shares.
So 15 shares came when you divided 300 by the difference. 300 is your total amount of the risk and the difference is 20. So that's where you get 15.
Exactly. So now I'm in this trade with only 15 shares. So 15 times my entry price, 352.65. I have a $50,000 portfolio, but my investment in this trade will only be about 5,300.
Okay.
Because I am only willing to risk $300 on this trade, right? Now this number is we're gonna discuss a little bit about what this number of risk unit should be for your portfolio, but this is basically the most important but the most simple part of trading. You always have to define your risk. You cannot be over positioned or less positioned, because less position, it's not as harmful. You might just not get as much profits or you might lose less. But if you're over positioned, then you're just going to risk more than you're comfortable with, right? Now, a lot of traders who are new will be thinking, okay, how much should I risk? Or I don't have $50,000 account. I have $500 account or $10,000 account or 10,000, whatever the thing might be. When you're new, you should expect to lose money because you're new. This is school. When you go to school and you pay tuition, this is your tuition. You're going to lose money. The key is to survive in the market long enough so you learn those lessons, and then you can finally use those lessons you've learned and make money now, right? But what happens mostly is a lot of traders don't manage their risk and they end up blowing their whole account, and now they're like, oh, trading is not for me, this is bullshit or whatever. This is gambling. No, it's not. Even if you gamble with your risk managed, and you play high probable. I don't know much about gambling, but there's games where you can know when to not play your hand, when to play your hand based on probability. You can be a profitable gambler because you're playing based on probability and risk management, right?
Yeah, so let me
So
summarize what you have done here. Faiz Bhai has talked about, if you have about $50,000 in your portfolio to spend, you don't want to spend $50,000 for a risky trade, just like as you would have seen that you are setting up your target price and your stop loss price. So depending on those two, how much you need to invest in order to save yourself, there's always a risk. So he showed us a formula where you have a risk of $300 and you divide it by the difference of the target price and the stop loss price. That's going to give you the number of shares that you can purchase. And then he used that number and multiply that number by the price of the share that is currently. And that is the total amount that you can risk if you have a 50,000 portfolio.
exactly. So this way, you have the peace of mind that even if in the worst case scenario, you know exactly your loss,
Yeah.
and in the best case scenario, you know exactly what your
How
win
much you
is.
profit.
So
Yeah.
everything is calculated, right? And when everything is calculated, it means it can be tracked. And if everything can be tracked, it can be improved on and analyzed. Like, as you know, you're the inspired analyst. You collect all the data, and then you make your decisions based on what the data is telling you, right?
Exactly.
It's the same thing. As a trader, you're basically a businessman, but you're not with business with other people. You're in business with your
With
employees,
yourself.
which is your dollars,
Yeah. Your own
right? You
money.
need to send you're sending your employees, which is your dollars, to work, but it's a risky work. So you need to control and have damage control and all of this, right? Now, going on to what your risk should be. The general rule is if you're new, it should be, I don't, if your account, you're starting off with a bigger account like 10,000 plus, then I would say 0.3% to 1% should be your risk. If you're
Okay.
starting with smaller than that, uh, like it gets harder when you're the less money you have, the more better as a trader you have to be to make money. When you have more money, there's so much more ways to make money in the market that
Yeah.
it makes it easier. So now, I also know that most people who have a smaller portfolio have a smaller portfolio because they're new at trading or they're struggling with trading, right? So what I would suggest, my advice is pick the risk unit, even if it's $5, it's okay. Because with $5, let's say you can only buy one share and your stop loss has to be, you can only take very, very few setups because $5 is very small stop loss. But maybe you take 3 trades in a month. But those 3 trades, you take them and you, even if you lose all three, that's a $15 loss. But what it will teach you in those $15 loss, hopefully, is worth a lot more than $15. Because let's say I play this trade, okay? My risk is 300. Let's see how what happens. I'm in the trade, boom, I'm out the trade. It hit the target, right? So my risk was 300. I made 15 times, let's say. What is the profit? 368.89. 368.89 minus 352.65 times 50. So I just made a profit of $243 about from this trade, right? Now, even if I was risking $10 and I took this trade, I would make maybe $7, right? Or if I risk $100, I would make maybe 70, $80. The whole point of this risk management is regardless if you risk $5 or you risk $50, you risk $5,000, the amount of skill you need to make this trade, the entry, the stop loss, the target is the same, which is the beauty of trading, which means the better you get, you at your control, at your anytime you decide, you can give yourself a raise by just increasing your risk unit.
So basically, what you have told us is that if you understand how to manage $10, you'll be able to manage $100 or thousands of dollars. But if you cannot manage the $10, you will not be able to
There's
manage the
no,
bigger
yeah,
amount. So this is what the understanding is.
100%. And this is like, I have blown up accounts when I was new because I was a very emotional, very uh, jalwa कहते हैं ना, like the
अब वो
the
फौरन से रिएक्ट
eagerness,
फौरन से रिएक्ट करना चीजों को.
yes, the impulsiveness, the eagerness,
Impulsiveness.
and
Yes.
right, these are things that are enemies of a trader, because as a trader you need to be calm under
Um,
losses, under, like, now it's much better for me. Before, when I used to, when my price was coming close to my stop loss, I'd be like, oh my god, I'm gonna lose, let me move my stop loss a little low. Then the stock would go a little low. I'm like, okay, let me move it a little bit lower. And then the market would take me out and then go back up. I'm like, how are they knowing that I'm moving my stop loss? Then I started saying, oh, they're stop loss hunting and this and that. But it's not the case. Yes, the market makers have the ability to take out people's stop loss and stuff, but it's not as often as you think it happens, right? So the whole point of this topic is, if you're into trading and you don't have a defined risk, the first step is define your risk. Be like, every trade I take, I'm only willing to lose $5 or $10 or $50. Make a, like, look at your portfolio, pick 1%, and then if you're a more intermediate trader and you're slowly starting to make consistent profits, what you would do is, for a whole year, keep your risk unit 1% of your portfolio. So if your portfolio is going from 5,000 to 5,500 to 6,000 to 6,500, increase your risk to
mm,
1%, because the 1% will grow as your account grows, right?
Congress,
But
yeah.
keep it at that 1% until you build that confidence, build that result. You have the results of profits backing you. It's not just, oh, I'm going to be profitable and that's why my risk needs to be high because then I can make more profit. No,
Got it.
you
So,
need to
so Faiz bhai,
do it.
right now you're talking about QQQ, which is an S&P 500 index fund, which is working as per the stock market timing, 9 to 5. Let's say you want to have the
Yeah,
same concept of managing your risk, but it's the crypto market, which is open 24 by 7. In that case, how do you set up your stop loss so while you're sleeping, your trade goes up to that level and you want to get out of it? How do you do that?
that's an amazing question. So I'm going to show you. I'm just going to take these drawings out of my chart. And the beauty of crypto is it's open 24/7. So to let me go to Bitcoin. All right. So we have Bitcoin here. Now let's say you wanted to take a trade on Bitcoin, right? And you're like, I want to enter over here. Now, for the people who know how to read charts somewhat, you know that if the price goes below all of this, I am basically wrong. It's probably going to go a little bit lower. I personally would put my stop loss right there,
Hmm.
but you could always put it there too. It doesn't matter. It doesn't matter where you put your stop loss as much as it matters that you put your stop loss. That is the most important part. Always have an exit plan for both sides, even if you're in profit or even if you're in loss. Okay. Now, that's my, uh, let me take this, and my target, let's say, is over here. That's my target. Boom. So now let's look at it. This price is 40,600. I'm going to keep the math simple. 40,600. Stop loss is at 35,800. That is, what is that? That's 40,600 minus 35,800. That's $4,800
About
difference
5,000.
between the
Yeah.
buy price and the stop loss price.
Stop loss.
Now, if your risk is $500 or $50, let's take a small risk. Let's say your risk is $50. $50
Divide by.
divide 50, 4,800 is, so you can buy $96 worth of Bitcoin. Not 96 Bitcoin. You technically could buy 96 Bitcoins, but if you're only risking $50, I don't think you have the capital to buy 96 Bitcoin, right?
Yeah.
So based on this setup, you would buy at your entry price $96 worth of Bitcoin, and your stop loss is there, and then you're gonna wait. That's your target. So it's basically the same math. You could do the same concept in gold, silver, oil, futures,
It works with
anything,
every market.
every market. This is
So
basic
what
math.
what Faisal is saying that whenever you want to make your trade, always have your target. Do not just go all in and based off your emotions, you make your sale or purchase of your assets. Whenever you're entering any trade, make sure you have a buy price, make sure you have a stop loss, and make sure how much you can take risk for. And this is what he's shown you now that if you have $50 to take as a risk, and following up the same formula, take up the difference, divide 50 by the difference, and that is the amount that you calculate, and it gives you $96 to invest. So it doesn't depend that you have to have $50,000 or $500 or $50. You can apply the same concept and manage your risk effectively.
And I'll share my personal experience. When I first started, I did not have a big account, right? Uh, but I was lucky enough to come into the markets with some knowledge about how to manage your risk. So I knew that even as the shittiest trader on this world, I can manage my risk. Nobody can take all my money from me because I know how to put my entry, I know how to put my stop loss, and I know how to put my targets. Now, you asked me a very good question. How do you make sure that these stop losses and entries are set while we're sleeping so we don't have to keep monitoring?
Yeah.
So this is when brokers like Coinbase Pro come in play. In Canada, I use Newton, and Newton has Kraken as another one. Kraken Pro is also another version of it. Now, Coinbase is one of the most popular ones. Coinbase Pro always allowed you to do limit buys and stop losses and targets. But the amazing news is, like 2 3 days ago, I believe they did a new update. I know Newton did, where even on the regular Coinbase and regular Newton, you have limit buys,
Oh, really? They
which
they didn't have
basically,
it
yeah,
before.
yeah, they didn't have it before, which is huge news,
Mm.
right? Because now, if we look at my Ethereum plan that I had, you can see that 1 2 3 levels are filled, and now it's going up. Me, if I didn't have those limit buy options, I would have to put alerts, and every time my phone would say, "Oh, the price is there," I would have to manually go and buy the amount that I said I would. But what if I was sleeping and I missed the trade and it goes to that level and it goes back up? So that's when these limit buys come into play,
How
where
many
you
limit
tell your
buys can you?
broker.
How many limit buys you can set up at one single point? Like you can set up 4, 5, or 10 limit buys, or there's a limit for it.
I I think there's no limit. The limit is how much cash you have in your portfolio to
Okay.
buy. I think that's the limit,
Okay.
because
My
when I said
question: Can you also set up a limit and a stop loss at the same time?
you can on Coinbase Pro, you can like the broker I use for stocks is called Interactive Brokers. I'll make a video about which broker you should choose and fees and all that too. But most brokers have the ability to put in something called bracket order. What is a bracket order? It lets you put in 3 orders simultaneously: your entry price, your stop loss, and your profit taker. Now, the stop loss and the profit taker are called one cancels the other. It's OCO. If this, then that. So, what does that mean? That if my stop loss gets triggered, cancel my profit taker,
Mm.
because I'm not in the trade anymore. If it hits my profit taker, cancel my stop loss.
So is it easy to set up this bracket order? Because I haven't tried that before.
See, I personally cannot so far set up a bracket order in Canada with Newton, and Coinbase Pro gives me a lot of headaches. A lot in Canada. I don't know why it's like that. In US, I know it's not as hard, but here I have with crypto. That's why I don't trade it as actively, because I want to, but I can't because of this lack of
Mm.
orders. Because I can't be always on my phone and not sleep, because crypto moves all like 24/7, right? But when it comes to stocks, that's why I'm more actively involved in stocks, because I can put in these orders and I can go away, go to the gym, I'm in a trade and it hits the profit or
Yeah.
it hits the stop loss, I just get my notification,
It's a great
right?
learning, Faizbhai. Thank you so much. I never knew about that. Such orders like bracket orders exist, because for a trader, especially, it's so much helpful that you have your multiple orders set up. If the price goes up, what kind of order that needs to be triggered? If price goes down, what order needs to be triggered? So I think this is one of
Exactly.
a very important tool that, I mean, we can do a session later on, just to see how we can
100%.
set that up.
Different types of orders and what time
Yeah.
to use what type of orders and things like that, for sure. Now, Adnan bhai, if you go look into Coinbase Pro, or I don't know which broker you use
Coinbase
in
Pro.
America, but Coinbase Pro, then you can definitely set up these orders,
Okay.
because in US it's much more easier to do these. In Canada you can set the orders too. The problem is of funding the account. So I don't know why they won't let me properly fund my Coinbase Pro account. but you can definitely do this, and I'll help you, and we can help our viewers as well with this.
Yeah, let me just tell everybody that I am not one of those people who will, be selling their cryptos that quickly, because in US you have to pay taxes as soon as you sell your crypto, change it from one
Yep.
crypto to another. So if you're a long-term investor, you have the benefit of it, because that's why I do my research onto the project so that I don't have to sell them when the market flips. But if you are not a person who's a long-term investor, and if you want to get out before market goes into the bleeding zone, then of course you can follow this strategy.
Yes, exactly. Usually investors don't use stop losses. They use in the stock world, they use options to protect themselves. Like they have concern levels and they don't use stop losses, but that's something we can discuss in the
Do
future.
you do you
Now,
follow do you follow the trades of Nancy Pelosi or no?
oh man, that girl is getting some information that we wish we all were getting, because she bought Google Leaps. So Leaps are LEAPS. What this stands for is long-term equity anticipation security. So these are contracts where you say that I have the right to sell it at a higher
High
price,
price.
and she bought these in December, I believe,
December.
mid-December,
December
and
last year.
Google last week, Google announced that they're going to do the 20-1 stock split, right? So this type of information, what she's getting is kind of fishy, like how is she getting all this? Like she makes, I was reading it somewhere, she only makes a couple 100,000 a year, but her net worth is like a few 100 million because of trading. And we all want to know what Nancy Pelosi is getting her information from, because
Yeah, exactly.
it looks kind
So
of fishy.
yeah, this is good to know. And there's a couple of websites that I follow that shows the trades of these politicians. So if you definitely want to be an analyst and keep an eye on what exactly they're buying, what exactly they're selling, you can be, making your portfolio bigger just by following their trades.
And you just have to be very careful who you follow. That's my
Yeah,
biggest advice. Because
exactly.
if you follow Kathy Wood, she is her portfolio is pretty down right now. But for a lot of people, I give her hate. But what I think is she is playing very long term. Her is very
Yeah.
optimistic in the future, right? So of course she's getting hit right now, but hopefully she gets in the profit in
Again,
the
we want to
future.
give a disclaimer that this should not be considered as a financial advice. This is just our personal opinion, and we are just sharing our opinions, and there is no
Exactly.
financial advice behind it.
Perfect. And I want to conclude the video by going over some analysis over some of the crypto projects. Adnan, by which ones would you like me to go over?
I just want only three projects to go over. One is Cosmos, Ethereum, and Chainlink.
Chainlink. Okay. So we already have Ethereum here, so let's do something with Ethereum. Okay. Now, Ethereum, we were having a very good bounce in the crypto world. Before I go into technical analysis, like I said, I haven't really had internet, so I'm not as informed lately. But Adnan bhai, have you seen any news, bullish, fundamental news come out lately in the crypto world?
The news that came out was only in the equity markets, where Google showed their earnings, and they've beaten their earnings and also announced the stock split. At the same time, we have seen what happened with Facebook. They have lost more than $250 billion from the market itself, and that
Wow.
was the first
Okay.
time that we have seen that investors, they also sold their Snapchat stocks, and people were like, come on, we thought that equity market is not as volatile as crypto market, whereas Snapchat the next day,
Is
they bounced back about
40%
40
down.
to 50%.
Yeah,
So
that's right.
the good thing is that Amazon also reported its earnings, and we have seen positive earnings. Apple had positive earnings, so this is what dragged the market upwards. In terms of crypto market, we had a good news about India allowing crypto. That was one of the bullish news that we had last week, and this is what I want to focus on this month. That Biden administration is going to have some new laws coming up for stable coins, and there's some new regulations coming up, so that could go both ways, positive way or the negative way. But next month I see that there will be a huge news coming up of interest rates increase. We had a good market when it comes to unemployment data. uh, just US has added about 467,000 jobs in January alone, which means the unemployment rate is sitting at 4% right now. So depending on these numbers, I expect the interest rates to increase next month, but inflation is not going to come down under 7% anytime sooner. So as long as we have the
Exactly.
inflation around 7% or more, people will still be thinking of Bitcoin as a hedge, and that will be bullish news for crypto.
Okay. Now that we know what's going on in the fundamental side, let's look at the technical side. So based on right now, all markets are moving kind of together. Like if you see the stock equity market and the crypto market, they're actually the crypto market has had a bit of a boom over the last few days, but we'll see how the market opens tomorrow. Now, here's what I'm seeing in the charts of Ethereum. So if you Adnan bhai, this I haven't gone over this on the channel, but you see these bars
Volume.
at the bottom.
Yeah.
That's the volume bar, right? So that shows us within a candle how many buyers and sellers were there in that one particular candle. So this big red candle here and this hammer candle here, you can see there's a spike in volume, right? That
More
means in
sellers.
during that there was a lot more sellers than, like if you go back, this type of volume, the last time it came was on 22nd June and 21st June of 2021.
Yeah.
So last summer is when this type of volume came. Now let's look at the sentiment behind this. When whoever sold here and shorted here is now in a loss because the price is above there. So they
Yeah.
are losing, right? How do short sellers get out of their position? If you're in a buy position, how do you exit it? By selling. So if you're in a short position, you exit it by buying, which causes more upward pressure. So technically, the reason why I think we're getting this push is also because all of these bears right here were trapped and they're getting forced out of their position. Kind of like a short squeeze, but not really. But it's helping the market push up. Now, what do I expect Ethereum to do, like crypto in general to do? Because, like you said, Anamba, there's still so much uncertainty involved.
Yeah.
Like Joe Biden is going to talk about the regulations that's going to happen this month, Ethereum 2.0, and there's a lot of things. Inflation is there, right? So what I think is going to happen is we, as crypto, is going to form a channel. So we might do something like we're going down here. You might go up, go down, and then just move sideways for a bit until there's a like a something solid, something that brings certainty to the world, to the crypto world, right? Now, crypto is still being looked at as a risk on money by the more old school investors who actually have the big bucks from they've been generating wealth for a long time. Now, the problem with them is they are bulls are usually very cautious buyers, so they want to make sure that everything aligns right before they put their money in. We are people who believe in crypto and we can see the benefits of it, and we're still very early. I still think this is pretty early in the crypto game. So based on the Ethereum chart, what I think is we're gonna come down a little bit. We can see that there was a doji formed yesterday. There's another being formed right now. So market wants to know what the equity market is gonna do tomorrow. And pro tip, this is a very nice tip that I myself use. If you want to predict what the crypto market and the stock market is gonna do in the morning, at 6 p.m. New York time, Eastern time, the futures market opens. And I'll give you two symbols you guys can follow. You don't have to trade futures, but you can follow them. ES1 and NQ1. If you follow these charts at 6 p.m. EST, that's when they open. The way they move will show you how the stock market is going to open the next morning. And you can also see crypto following that for now. It wasn't following it that much last year, but this year, it helps you predict what the market is going to do. So this is what I think for Ethereum. I think there's going to be a bit of a pullback. I still have my 40% buy here for now. I haven't moved it. No plan has changed. Now, if we see something and crypto Ethereum starts going higher, I'll take what amount of money I had here, plan, and start deploying it up here, wherever the chart is. But so far, I'm very happy with my 3 buys that I got because I'm in profit and I've lowered my average as well. So,
Yeah.
all right, Adam. Let's look at Atom. Boom. I also bought some of this actually. Okay,
Mm.
so Atom.
There's a
Now
huge buy
let's see.
pressure in the middle.
Yep. So this is what I would call a channel there, and there. So Atom is moving between this area right here, right? And it would be hard for me to make predictions as to within this channel where it's gonna go. Like it could go higher, it could go lower. But Atom, like I said previously, it's been performing very strongly. Like it's shown strength even in the most bearish situations. It's a good project. What I think is the best strategy for Cosmos would be every time it has a dip of 5% or more, buy sell. That's the easiest strategy that I can give you of dollar cost averaging. Every time you see 5% down on Cosmos, buy a little bit, buy a little, chip in, build a
And don't
position
let
there,
your Cosmos die in your wallet. Make sure you start
stake it,
staking it. And that's where I have
100%.
shared a video last week. Just within 2 days, I staked about $900. 2 days, I earned $1. Another 4 days, I earned about $2. So your money is keep on compounding and increasing. That's
That's
how you create and
that's
build
free
your wealth.
coffee. You never have to pay for coffee anymore, right?
Exactly.
So
It's a free coffee for you forever.
yes. So the so with Cosmos, what I see is the channel between $45 and $20. I know that's a $25 gap, but like we said, crypto is volatile, and you don't want to be the guy who's waiting for it to go lower and lower to get the best
Yeah.
price at the bottom, because there's the chances of you catching the exact bottom of anything is very low, like almost close to impossible. And selling it at the exact top is also impossible. So you need to realize that you will never catch the bottom and you will never sell the top. So there will
Only if
always be money on the table.
only if you are Nancy Pelosi or somebody in the government side and have some insider information, then you might get lucky. But
Yes.
as an average person, it's next to impossible.
Yes. So if Nancy Pelosi, you're watching this, please hook your brothers up, right? But yes, so this is what I think of Cosmos. I think this is the channel we're in, and the lower every time it drops 3 to 5%, I'm gonna be buying a little bit, tiny amounts.
Yeah.
And let's look at Link USD. Boom. Okay. Let's go into the weekly chart. All right. So Link looks like it's at a very good support point, which is right here. And that's there. Looks like there's a lot of accumulation going on with Chainlink, because if there was an accumulation going on, we would see it
Fall down.
breaking this.
Yeah, breaking that
Would be
support.
it would look a lot more heavier, like the selling pressure would look a lot more heavier, but it's moving sideways. And every time you can see that every time it gets to this level of $17,
Yeah.
you see these long wicks at the bottom, like 1, 2, 3, 4. We talked about this in our first video. The bottom shadow represents buying pressure. So
Yeah.
every time it comes to this zone, we see buying pressure
Buying
step in
pressure.
and keeps the price there, right? So with Chainlink, I would say it is at a good price right now as a buy. I'll Here's what I would do. You know what? Because I was not monitoring this chart until you just mentioned it. So I'm gonna make a plan for myself right live right now of what I'm going to do in the coming few days. So I'm going to put a little buy right there. Same thing I did with Ethereum. 10%, 20%, 30%. I'm gonna make that right there.
Yeah.
I don't think this is gonna go this low though.
Yeah.
So here's my plan. I'm gonna do 20%, 30%, and 50%, because I don't think I need a fourth level for this one, because it's holding very strong, and it's also a very, very good project. So here is my plan on Link. And if you guys haven't joined Adnan Bhai's Telegram, I would suggest you do so, because that way, if I update my plans, I post it there. Adnan Bhai always posts his updates, and there's also other people in the group that are also knowledgeable, and they bring in their stuff. So it's a good way to stay informed. So what I think of Chainlink and Cosmos is that they're accumulating. Big guys, big whales are accumulating. You can see from the charts, there's buying pressure. It's holding the price key levels. Ethereum has done a very strong move. Bitcoin, even like Bitcoin, has done a strong move as well. I still expect some sort of a pullback because every time something moves up so strong, it has to pull back. However, I will mention this: the higher up we go in the crypto world, the lower the chances get that we will come back down to the levels we dropped to a few weeks ago.
I like that quote.
So
It should be
keep that in
framed.
mind.
It should be framed as a quote and put it in your wall behind you whenever you make your next video.
Yeah, because the problem is, I know so many of my friends, when I was telling them, bro, I'm buying here, it's a good price to buy at 2,300, at 2,400, at 2,200. They're like, bro, no, it's going to go below 2,000 and then I'm going to buy. I'm like, I'm going to buy then too. But who's telling you? Did someone tell you, give you a prophecy that it's going below 2,000? Nobody
Yeah.
knows. So you got to play it with what's happening, not what you want to happen. And that's the way to think as a trader. So any questions from you, Adnan Bhai?
No, those are, I think, some of the important topics that we have discussed. And this is what most of you ask me, is it the right time to get in? Is it the right time to sell? So when you follow these videos that, we are creating on weekly basis, you can set up your own targets for buying and you can set up your own target for selling. So next time you don't have to ask anyone and you can do these analysis yourself. So thank you so much, Faiz Bhai, for sharing your amazing
No
knowledge with
problem.
us one more time. I know it's not easy for you to take some time out and go to a cafe to record this video for us. I really appreciate that, and
My
hopefully if
pleasure.
you guys have any questions, ask it in the comments, and make sure to follow Faizbai on his Instagram and YouTube, and inshallah we'll be in touch with you. If you have any question, let us know.
Yes. Take care, guys.
Take care.